ES1, the S&P 500 E-mini, has just put in one of the sharpest single-week drops of 2026, slicing through the 7,400 level and entering a major daily FVG zone. The weekly is still screaming bullish, but the lower time frames are telling a completely different story right now. Is this the buy of the year, or is there more pain incoming before the bounce? Stay with me. Welcome back. Today, we're breaking down the S&P 500 E-mini futures, ES1, on June 10th, 2026. We've got all four timeframes loaded: weekly, daily, 4H, and 1H. Here's the bias snapshot before we dig in. Weekly, bullish. Daily, bearish. 4H, bearish. 1H, bearish. This is a mixed alignment setup. The macro trend is bullish, but price is in an active corrective move across every lower time frame. That tells us one thing immediately. We are not chasing longs here until the lower time frames confirm a reversal. Right now, the short continuation trade is the higher probability setup.
Structure walk. Weekly and daily bias. On the weekly, ES has been in a clear bullish market structure since the April 2025 lows near 4,800, printing higher highs and higher lows all the way to 7,700. Every BOS on this chart confirms the bulls are in control at the macro level. But drop down to the daily, and the picture shifts. Price printed a lower high at 7,630. Then a massive displacement candle broke below the 7,400 BOS. The daily is now showing the early signs of a chalk, a change of character. And unless bulls reclaim 7,500 plus, this correction has room to run. Liquidity is the engine of this move. The big BSL pool above 7,700, the all-time high, remains untouched. But below us, there are two key SSL pools being hunted: the immediate cluster at 731.10 to 730.30, and the deeper target down at the April swing lows near 64.50. Right now, price has already swept the June equal lows and is pressing into that 731.10 to 730.30 zone. Watch that level. It is the next magnet. On the daily, we have a massive untested FVG stretching from approximately 7,200 up to 7,350. Created by that explosive bullish candle back in early May. Price is entering the upper boundary of this zone right now. Zooming into the 4H, we have a second FVG stacking right below at 73.10 to 73.40. That's two FVGs converging with Fibonacci confluence at the 0.5 level, 73.69, and the 0.382 at 73.40. This is a high confluence zone, and it is completely untested. The zone is fresh, and price is knocking on the door. Entry conditions for the short are pending. The setup is a retrace into the 1H and 4H bearish FVG at 7,419 to 7,438. That is the OTE zone on this cell structure. What we need to see, price rallies back into that zone, and then we get either a rejection wick, a bearish engulfing candle, or a 1H BOS printing lower lows. Until price reaches 7,419 and rejects, we are on the sideline. Here is the plan. We are looking short. Entry zone 74.19 to 74.38, right into the bearish FVG. Stop loss sits at 74.60, just above the 4H FVG upper edge. TP1 is 73.20, hitting the immediate SSL cluster. That gives us roughly 3.7R on the trade. TP2 is 72.50, the liquidity wick low on the 4H. And if we get there, we're looking at 6R. We are risking 30 points to make over 100 on TP1 alone.
Traffic light summary. HTF bias, yellow. Liquidity, green. Zone, green. OTE, green. PA confirmation, yellow. Overall score, 3 out of 5 green lights. HTF bias is amber. We're shorting against the weekly bullish trend, so this is a counter-trend corrective trade, and we size accordingly. Liquidity is green. SSL pools are clearly mapped, and price is actively sweeping them. Zone quality is green. 2 FVGs stacking with fib confluence, high quality. OTE is green. Price is inside the retrace zone. PA confirmation is amber. We need that retrace back into the FVG and a rejection trigger before we pull the trigger. 3 greens. The setup is building nicely. Conditions are building. Stay patient. Let price come to you. Do not force it. That is the only mindset that works here. We have a clear map, the zone is identified, the liquidity targets are drawn, and the RR is exceptional. The only thing that can hurt you right now is jumping in early without the confirmation trigger. ES is moving fast. The FVG will fill or it won't, and the chart will tell you. Your job is not to predict. Your job is to wait for the evidence, then execute without hesitation. Discipline here is the real edge. That is the full ES1 breakdown for June 10, 2026. Drop your bias in the comments. Are you waiting for the short continuation, or are you watching for the long off the daily FVG? I want to hear from you. If this analysis added value, hit like and subscribe. New breakdowns drop every session. Until next time, stay sharp, stay patient, and stay in the zone.